Well, good morning. Thank you, Cassie. Appreciate those of you joining us this morning, and welcome to May. We are officially into springtime. I know it starts at different times, but for here in Nebraska, seems like the 1st of May, everything is really green and growing. And certainly in the ag sector, we are in full form as we're out planting and calves are on the ground and grass is growing. My name is Mark McCarg from Central City. I'm a fourth generation farmer here. On our particular operation, we grow organic and conventional irrigated corn, soybeans. We have some popcorn. We'll hopefully be starting planting maybe this afternoon, and we also have a hog operation. I am currently the president of Nebraska Farm Bureau, and I also serve on the board of directors for American Farm Bureau in Washington, D.C., where I am just the immediate past president of the Farm Bureau's Trade Advisory Committee. We are holding today at the beginning of May, it's International Trade Month here in the country. And we're going to talk about trade, the importance of trade to Nebraska farmers and ranchers, and I would say really to the economy of Nebraska. With me today, I have a number of guests. We have for our Nebraska Agriculture and International Trade Report. This is for 2023. Jay Rampey from Rolling Prairie Economics also is available to answer questions. Is Jordan Dux. He is our Farm Bureau Senior Director of National Affairs. And Abigail is with us as well. She's our economist and policy analyst for Nebraska Farm Bureau. So we've got a good group of folks here on online today to answer any questions that we might have. And hopefully we'll get a few of those and we'll get some clarity. We've been putting this report out since 2017, and Nebraska Farm Bureau has issued this report, which really does compile USDA's numbers. We break it down. And I think the interesting thing about this particular report that's unique is we break it down per county and individual farm and ranch level. And many times, I think in the conversation of trade, it certainly gets lost that how does it actually affect me if I'm out planting my corn like it was the last couple of days? What does trade have to do with me specifically, with my operation, with my county? This report kind of details that out. We continue to release this report just because it really, in fact, impacts the economics of Nebraska. Believe it or not, almost 30% of the total receipts, ag receipts in Nebraska come from our trade around the country, around the world, which is really significant. As you also know, that President Trump has wasted no time as he's into the office the second time, both threatening and issuing tariffs on foreign customers and competitors. And we're trying to flesh that out to see how that's actually going to affect us. But I think we do have to realize that under the last administration, for the last 4 years, we really had nearly zero conversation relative to trade. I'd say that if you were a car, we were in neutral, we were parked. We had the ability to go out and do trade deals, but we just were not making that happen. And so there were no new trade deals struck under the last administration. After decades of trade ag surplus in this country, agriculture had always been one of the areas that have really helped our trade surplus in a positive fashion. But in 2022, we started seeing a deficit happen even in the ag trade sector of over about $2 billion. Now, that number has grown significantly since 2022. It went to $20 billion in 2023. And then in 2024, we're looking at probably a 30 billion. And we may even see a higher number than that before we get done here in 2025. And that's very concerning to us in agriculture, because again, knowing that so much of our income comes from the ability to trade our commodities really around the world. We have to do more. We have to open up our global markets. I've had the opportunity to travel the world extensively, talking about trade, encouraging trade, specifically with Nebraska, and we have to encourage those relationships and make sure that other countries know that we certainly are willing and able and have the ability to trade a vast amount of both ag products, but other things that we do really, really well in producing. But we are not the only ones at the table. It's not uncommon that if we are in different countries, there's countries around the world that want to sell their products as well. And we need to make sure that we have a trading arena that has a level playing field. And President Trump is certainly working on that. You know, in this release also, we're gonna lay out a roadmap for trade in 2025. It's going to be our trade agenda for 2025. And those of you in the media, we will have that available for you. It's really, really simple. There's really only 2 points that go along with that. And the first point is asking the Trump administration to expand markets. Bottom line, we have a big world out there that wants our products, needs our products. Our products are the safest. We produce them economically in a manner that is very doable to get them around the world and still have high impact. And we just need to open those markets up. We've had a lot of countries that have shut down or certainly taxes or put too high a tariff on us that kind of takes us out of the market. We need to fix that. And then the second part is just eliminate non-tariff trade barriers. There's a lot of things that stop our trade or limit our trade other than tariffs. We'll talk about that just a little bit as well. Well, when it comes to markets and finding new markets, now's the time. Bottom line, we need to take advantage of the new administration. We need to take advantage of the momentum that is rolling through and get some new trade deals signed, strengthen maybe some trade agreements that we already have, and then also eliminate some trade distorting barriers that ultimately we do that. I am very confident that the economy in Nebraska, certainly relative to agriculture, is going to have a significant boost. Some of the things that we talked about just on the non-trade tariff barriers are things like sanitary, phytosanitary, biotech. Some countries just don't appreciate the biotech and the tools that we've established in growing some of our livestock and our grains. And then lastly, even in Europe, they have some things called geographic indicators that we can't sell certain products into Europe because they kind of have a particular label on some of their products that allow us not to sell products in. But right now, if President Trump, I'm confident that if he can find new trading partners, and I think he will, including addressing our economic relationship with China. And certainly that is something that is top of the list. And if we can eliminate some of these non-trade barrier tariffs, I really believe that we can return to a surplus in our ag trade deficit and fix that. And I think that is the goal. Number one goal is to fix our ag trade deficit. So without further ado, I do want to welcome Jay Rempe from Rolling Prairie Economics to discuss this report. He's done some good work here and anxious to kind of hear, Jay, what some of the numbers are and what you're seeing in this new report.
All right, thanks, Mark. Good morning, everyone. It's good to be here. As Mark said, I'm Jay Rempe. I'm with Rolling Prairie Economics, but prior to that, I was an economist with Nebraska Farm Bureau, and that's where this report got started. As Mark mentioned, we started it in 2017. And we started it because as Mark already mentioned, we were trying to come up with a way to stress and point out the importance of trade to Nebraska agriculture, and then bring it down, I guess, from the state level and bring it down more to the local and the farm level to try to reinforce that. And so that's what this report tries to do. It tries to reinforce the importance of trade into not only Nebraska, but our local communities. But then doing this over time, we could kind of track over time the ebb and flow of trade and how the up and down of trade can affect our local communities and our local economies. And then lastly, by tracking this, we can look a little bit about how various policy decisions around trade both in Washington, D.C. and overseas can affect Nebraska agriculture directly. So that's what we're all trying to capture with this report. As Mark mentioned, this report is using the latest iteration anyway, is using 2023 data. So it's a bit dated in the sense that we're sitting in May 2025, but the data was just released by the USDA in March of this year. So we take that data, and what they do is release data on Nebraska at the state level, and then we take that and then we try to come up with measures of what that means at the county level. And just a note of caution before we launch into the specifics here, these aren't actual estimates of what trade is worth to a county. What it is more of a measure of a gauge. When you take the state level figures, which counties benefit more, which ones don't, is kind of a relative measure. So don't get quite so hung up on the numbers. Just think about it shows, I guess, a little bit a picture of the distribution of trade and exports across the state. So with that, I think we'll get started. And if we'll throw up this first slide, Cassie, and we can talk a little bit through that. Perfect. So what we're doing here is just basically tracking the value of agriculture exports from the state of Nebraska since the year 2000. This data comes from the USDA Economic Research Service. And you can see that from the year 2000, it's grown quite a bit. In 2022, we even touched almost $10 billion in trade from the state of Nebraska. But really, when you look at not only 2022, but 2023, the growth, it's 2023's numbers, it's $7.9 billion of exports coming out of the state of Nebraska, was 3.5 times greater than that of 2000. So when you think of the growth of Nebraska agriculture since the turn of the century, trade has a lot to do with that. Unfortunately, as you can tell, in 2023, we saw the exports decline. It was almost down 21% from 2022. And it broke a record string of 3 consecutive years that we saw growing record exports out of the state of Nebraska. And as Mark mentioned, that growth over the last few years, or Mark mentioned, that wasn't largely due to any new trade agreements or anything happening there. That's basically a function of economics. The world market was good. We had the product to supply at a good price, and people were buying it. So that's economics driving that growth. And then also it's economics that come into play in the drop in 2023, and we'll talk about that a little bit. But still, despite the drop in our exports in 2023, Nebraska was still the 5th largest ag exporting state in the nation. We only fall behind California, Iowa, Illinois, and Minnesota. So we are one of the top powerhouses when it comes to ag exports in the nation. If we can go to the next slide. So this just breaks it down a little further. Again, the same time frame, 2000 to 2023. And we're showing the breakdown of the commodities, the top commodities that Nebraska exports. Again, you can see the growth that's occurred since 2000 in our ag exports. And what really stands out, I think a couple things on this graph, is the dominance of corn, soybeans, and beef in our export portfolio. Those are the top 3 things that we rely on for our ag exports. They together in 2023 made up 61% of our total value of ag exports out of the state of Nebraska. And you can see it varies over time between those 3 commodities as which one is the top one. All 3 of them were down considerably in 2023. Beef exports were down 14%, soybeans were down 25%, and then corn was down 36%. And here again, we're talking about the value of the ag export, not the actual volume of commodities, but the value. But still, despite that, beef, Nebraska was the nation's largest exporter of beef in 2023. And we were the 3rd largest in corn and the 7th largest in soybeans. And then down below, you can see the other commodities that we'll export: wheat, soybean meal, vegetable oil, and pork. I kind of consider those the tortoises of our ag trade, if you will. They're slow and steady. They're just right there year in and year out. They're growing a little bit over time, as you can see, but they're always going to be there for us, and they're important in terms of the overall value of exports. And when you look back at 2023, unfortunately, of these top commodities, only two saw growth in that year, and that was pork and soybean meal. And so everything else across the board was down. So when you look back at 2023, you think why was that? Well, largely is due to a couple of reasons. One, China was coming out of the COVID pandemic. Their economy was not performing very well. They cut back on their purchases overall. But secondly, then they turned more to Brazil and South America, Argentina, for their purchases. And when you look at the USDA looking at the US numbers, they said that 50%, 57% of the decline in our ag exports in 2023 were due to corn and soybeans in China shifting away from the United States to South America as a supplier. So we had largely those are the reasons, and then the stronger dollar value in 2023 made our products a little uncompetitive. But still, despite that, China was still one of our largest importers. I think they were third largest in 2023 behind Canada and Mexico. And then also Japan and South Korea remain top markets for Nebraska products. If we go to the next slide. So here, this is the part that makes this report unique is we're trying to break it down to the county level. And so what we did is we took the statewide numbers produced by the USDA, and then we, based on production, crop production, and livestock numbers in each county, we tried to break it down to what is the value of trade to each county. And the darker the county, the greater the value of trade. And generally, what we found year in and year out, there are about 5 or 6 counties that continually benefit the most from trade in the state of Nebraska. And those are Cumming, Platte, Custer, Holt County, and Dawson and Lincoln County are sometimes in that mix as well too. And so that's no surprise. In 2023, it was the same thing. And so those are the core counties that generate the most in terms of value in ag, from ag exports. But you can see that the value of exports are distributed statewide. Every county benefits from trade in the state of Nebraska. And so trade does bring in some revenue into all parts of the state of Nebraska. You can see in these numbers, there are 2 counties that the value that we estimated exceeded $200 billion. Those were Cumming County, almost $204 million, and then Platte County at $202 million. Those are the only 2 counties that exceeded $200 million this year. Contrast that with last year in 2022, there were 6 counties that exceeded 200 million. So you can see where that drop in the 21% drop in value statewide trickles down to the county level. Another example of that is both those counties, Cumming County last year, I think was 233 million worth of value. This year it's only 204. And Platte County last year was 245 million. And this year it's at 202. So you can see where that shrinking in trade resulted in less dollars available for those counties. On the other hand, you see kind of at the other end of the spectrum, those lighter shaded counties in the Sandhills. Obviously, those are Sandhills counties, cow-calf counties. They do get some value out of trade because of the beef trade and the cattle markets, but they all fall below about 10 million. So they're kind of on the other end of the spectrum when you look at the value of trade. But again, they do derive some value out of trade. We can turn to the next slide, Dan. So what I want to do is kind of move away. I will mention before I move on, I didn't include this in today's presentation in the interest of time, but the report also includes a breakdown of per farm value in each county of trade. And in that case, Phelps County was the top. And I believe, if I remember correctly, it was around $470,000 per farm that we estimated that they value from trade. We also then break down the number one commodity for each county in terms of trade. And there's a map in the report that shows that as well. It's kind of interesting to see how the state shakes out in terms of the value of trade as we look at the state as a whole. But so I'd encourage anyone to go look at the report and take a look at that if you want. I want to turn a little bit to anticipating maybe next year and what might happen. What I'm showing here is why we don't have Nebraska specific numbers yet, these are U.S. numbers for the percent change in value from year to year between 2019 and 2024 to give a sense of how 2024 stacks up against previous years as we anticipate next year looking at this. And you can see on the far right, the total ag exports were only up 1%. The value of ag exports last year were only up 1% in total. But when you look at some of the key commodities important to Nebraska, like soybeans, they were down 12% last year. Corn was up just 6%. It was up just 6%. And then red meats, that includes both beef and pork, were up 5%. I'm anticipating next year when we do this, it'll be largely the same in terms of we'll probably see a little slippage in export value to the counties, and some of those numbers we probably won't see any county above 200 million next year because of what we're seeing here. And the reason I say that mostly is even though red meat and corn were up, soybeans, a greater percentage of soybeans get exported out of the state, nearly 50% of the soybeans. So that has a little higher impact or greater weighting when you start thinking about the impacts and how they just get distributed across the state. And again, 2024 was largely plagued with some of the same issues in terms of China, South America competition, the higher dollar, and then also we had some ample worldwide supply. So it was a tough trading market for U.S. exports last year. And then if we'll move to the last slide. So then I wanted to just take a little bit of just a little peek at how we're stacking up so far this year. And so what I'm showing here is the change in the value of exports in some of Nebraska's commodities again for just January and February this year. That's the only data we have. And these are U.S. total numbers relative for 2024. And unfortunately, you can see a lot of red on this graph. The numbers are down. The total value is down 9%. All across the board of the major things Nebraska exports, soybeans 41%, hides and skins 17%. The one bright spot is corn, and that's largely being driven by Mexico and their purchases of corn right now. So that's a good customer for us. And unfortunately, this is even before the trade tariffs and things really, those started coming into play more in March. And so this shows that even before the escalation of the trade war and some of the things that are happening, we're seeing a tough climate for ag exports. And unfortunately, no one has a crystal ball to know how the rest of the year will finish out, but it's not starting on a good note. And it kind of looks like as that trickles back to Nebraska agriculture, that's going to cause or contribute to some of the struggles we're seeing in the farm economy right now. So I'll finish up, Mark, with this. Just I want to finish up on a more positive note, I guess. Even though 2023 was down a little bit, or 21% compared to 2022, it was still the third highest export value on record for the state of Nebraska. So it was still a good year in terms of the long term and in the historical context. And so and you can see how that trickled out through the counties and brought value to the county. And some of our counties more than $200 million worth of value, and how these dollars get distributed across the state, and every local community is touched in some way by agricultural trade in the state of Nebraska. So I'll turn it back to you, Mark.
Well, thank you, Jay. Appreciate it. And if you are online and you want to ask some questions, just make sure and raise your hand or type something into the chat box. I think it really is clear, Jay, when you delineate out what it means to our counties. I mean, the fact that $200 million or a slippage of $30 million to a county is really significant. And I also noticed that even in some of those smaller Sandhills counties, yeah, the number may be a lot less, but there's certainly less people out there as well. And so the effect of trade relative to individual farmers or ranchers probably still certainly is significant. Well, do we have any questions yet? I'm not seeing anything yet. I would like to invite Jordan Dukes here just to talk briefly about phytosanitary and non-trade tariff barriers, because that's something we talk a lot about. I think that's something this administration could really help us with.
Yeah, thanks, Mark. Appreciate the opportunity again to talk with you all. And as Mark mentioned, there's a lot, a lot of the headlines that folks talk about right now, and rightfully so, is the president's work on tariffs, essentially, those taxes that are levied as a product is brought in. But non-tariff trade barriers, those rules and regulations established by governments, those are big deals, especially for agriculture. And the sanitary, phytosanitary issues that normally come up from an agricultural side really are the main driver for, struggling for Nebraska farmers and ranchers in this country to have access to a lot of markets. And the EU is a big target, I know, catching a lot of headlines in terms of a country we need to work through a free trade agreement with. The UK also on that front. But in terms of agriculture, they probably have some of the largest and most difficult sanitary, phytosanitary, non-tariff trade barriers that we have out there, whether that be biotechnology approvals, whether that be certain products that are utilized in the livestock industry. Those are big ones for us that we really struggle with. And then we also, continuing on the biotechnology side, even some of our close trading partners, Mexico, when they tried to enact the ban on GM corn products coming into Mexico, and they later refined that down to just GM white corn, that was extremely problematic for us. And not just because it limited access, but also because it went against a free trade agreement, the USMCA agreement, the US-Mexico-Canada agreement that President Trump negotiated with those countries. And so we eventually won on that case. That was positive, but we're always on the lookout for these issues. Mark had mentioned earlier geographic indicators, and that is another challenging one. We have a few in the United States, but really Europe is the primary area for those as well. When you have Champagne can only come from the Champagne region of France. Parmesan cheese made in Italy, it can only be labeled as such if it comes from that area of Italy. Those are problematic for us because we make Champagne in the United States. We make Parmesan cheese as well. So trying to break down those barriers and trying to work through those issues are important for agriculture. They're issues that we really try to tackle when it comes to negotiating free trade agreements, and hopefully, as we start seeing some of these agreements the president is working through, not only will agriculture be just simply included, but a lot of these issues that prevent access will be addressed as well. So appreciate that opportunity to talk about a few of those, Mark. And yeah, if folks have questions, we can unmute you. But feel free to go ahead. If you have a question, we're more than happy to answer those or type it in to the text box. Actually, I think we do have one in the text box here, Mark.
All right, we do have a question. What is the biggest issue facing the farm economy right now, and what role do tariffs play? Jay, I don't know if you want to take a shot at that first.
Yeah, you bet. I think there's a couple issues right now in front of the farm economy. From a supply demand issue, particularly on the commodity side, corn and soybean side, we've seen some good record or world production over the last year. World supplies are in good shape and stock, and demand's been good and steady, but that's because of the supply issues or greater supplies. We're seeing prices just kind of just in the doldrums right now, and unfortunately, I don't see anything changing that in the near future. Obviously, we're entering the growing period for 2025, and we'll be watching the weather and over the next few months, and that could change dramatically over the next few months. But that'll be something to watch. I think in the long term, there's a couple things, and obviously trade and tariffs are one of them. How this all shakes out. If you look back over the last 20 years in Nebraska, there's been a couple things that have driven our ag economy, and that's trade and ethanol and biofuels. And on the trade side of things, there's a lot of question, a lot of uncertainty, and I'm a little nervous, even beyond the short term, of what the current unrest, I guess, if you will, is doing in terms of our potential markets. Because I already mentioned China's turning more to South America. We see Japan talking to Brazil about beef. Japan's one of the largest beef markets. So I think that's creating a lot of uncertainty in the farm economy. And then on the biofuel side, there's a lot of decisions, and Jordan could probably talk a little bit more on this, but there's a lot of decisions to be made at the federal level concerning the future of ethanol, of renewable diesel, and some of the other biofuels that I think will be critical for Nebraska agriculture moving forward. And so I think those two things right now are kind of weighing on the ag economy, the uncertainties around them, and then again, the supply and demand conditions aren't favorable really right now. And so I think all those things. The one bright spot obviously is the cattle market, the lower cattle numbers, the cattle prices are, and in Nebraska, that's a great thing because cattle production is vitally important. So that's a very good positive, and consumer demand for beef right now is staying very resilient and strong. And hope that continues into the future, because I think that's the one bright spot for Nebraska agriculture.
Yeah, the fact that we are the beef state, and certainly even on the export side, we're the #1 exporter of beef. I think that plays really well. Jordan, federally, some of the questions we have certainly resolve around the farm bill. I get that a lot in the regulatory environment. Maybe just speak briefly to that.
Yeah, I certainly can. When it comes to, I'll hit on the biofuel side real quick first. And as Jay mentioned, the future of the biofuels industry, the reason that's important continues to be that the president talks an awful lot about domestic consumption of agricultural products. And for Nebraska, we ship an awful lot of corn to ethanol plants. And the growth of that industry is going to be extremely important for the future of that industry. And we've seen some actions recently, whether it be the administration teaming up with some Midwestern governors to create a situation where we have an emergency waiver that was just recently approved for year-round E15 usage nationwide. That is an extremely positive step, but that we need to address this legislatively as well. And that needs to be done to make this a permanent fix, so we aren't issuing a waiver every time. And Senator Fisher and Congressman Smith have been working on that for a long time. But also the synthetic aviation fuel industry and what that could possibly mean to boost ethanol production, where we are replacing. It's a 1-to-1 replacement. It's not an additive. But a 1-to-1 replacement for jet fuel would be extremely beneficial to Nebraska. And with some of the things that we've set up in this state in terms of maybe some infrastructure, we really have an opportunity to do some big things on that front if that industry can get off the ground. So certainly a lot of positive there. On the Farm Bill side of things, that gets into where if we have a bigger supply than we have demand, if some of these things aren't happening, we have risk management tools that are out there. They are outdated. They have been around for quite a long time. I think I saw a comment from Chairman Thompson this week that we have a Title I Farm Bill programs that are set up utilizing data and prices from 2012, which is not inaccurate. And so those programs need to be updated. They need to be changed. We need to provide more risk management tools for producers. They have crop insurance. They have access to Title I programs that provide payment should prices fall even further. We need to do those things. It's going to be a complicated legislative road to get there, with reconciliation happening and what that looks like. But certainly a farm bill across the finish line at President Trump's desk would obviously be very positive from our standpoint. It looks like we've got another question there, Mark.
Yeah, I think somebody's asking, when it comes around to harvest season, are we heading into positive or negative territory, and what should farmers be looking out for? And that's the billion-dollar question, right, for Nebraska, for farmers and ranchers. And so I would say that as we work through the summer, my hunch is that we will have a much better idea come August, September, probably, where we are at on some of our trade conversations and the ability or the merit of potentially some new countries coming online and buying our products. And so I think we'll have a sense there. So I think the jury's out. What we are encouraging people right now, we're in planting season. We need to control the things that we can control as farmers. And that's just doing a really good job at production. we have to get the grain, we have to get the animals, we have to get the livestock in order to sell them. And so I'm encouraging our members just to really work at doing their part that they can control, do that really well. And then as we look at how the markets are shaking out, we will have something to actually market. All right, I think we have one more question. We're getting close to needing to wrap up. There's a question. We know that it could take a significant amount of time for countries to negotiate, agree, sign, and eventually enact, enforce trade agreements. What impact does that waiting period have on agriculture? I think that is a great question. It's a question that I thought about with Senator Ricketts last night. We had him on a roundtable, and certainly they cannot happen overnight. But as we know, just the announcement of trade deals, the conversation certainly seems to move the market, give some lift on the market. And so I do believe that if we have trade deals that are being talked about, or certainly we're working out the details, I think it will affect probably both the optimism of the market and how we are looking forward. I don't know, Jay, if you have any other thoughts there, but certainly it is true that these things do not happen overnight.
No, that's very true, Mark. A couple thoughts come to mind when thinking about that question, and it's an excellent question. One is in terms of timing, particularly when we look at the Chinese market. The soybean, as I showed earlier, the soybean exports thus far from the United States this year are down quite a bit, and that's largely due to China. They're the largest importer of soybeans in the world. But we're moving out of this season where the U.S. is a supplier to China, and we're moving into South America. And then when harvest comes around again, is when the U.S. starts boosting or pushing more exports into China, just the cyclical nature of the thing. So I say that because if there's some things that can be worked out in the way of the trade agreements and like beforehand, before we get to that particular market, it could be beneficial this fall and could be helpful. And then the other thing I always think of, and we economists kind of harp on this, but uncertainty is not a friend of growth. And to the extent that this uncertainty just hangs out there, everyone wants to kind of pull back and take a wait and see attitude. And and we're already seeing that, I think, show up in not only ag economy or some of the ag economy numbers and data that coming out, but the U.S. economy as well. And so the longer that period goes, the more that grows, and it'll be more difficult to overcome. But hopefully this will be somewhat short-lived and we can get on down the road.
Yeah, thank you, Jay. Abigail, I don't know if you'd have any particular thoughts on that, but I mean, certainly relative to the larger sector, the economy, how we get these trade deals done. Any thoughts that you're having at the moment?
I can add to Jay's thoughts a little bit. I think when we talk about waiting periods and growth, that definitely makes it hard. We've seen a huge increase in farm lending and operating loans. So that is definitely not a sign maybe of innovation, but of instability. So a little bit unstable in the market. Thankfully, though, prices haven't been impacted as much as maybe the stock market has. So that's a benefit to ag. And maybe we'll see that a little bit later. But the markets have definitely been unstable, but not maybe as negative as anticipated.
Yeah, anyway, we have another question that came in. I think it's another great question, that if other countries are looking to go other routes to buy products, especially like China as a big country that buys a lot of product, how's that going to affect Nebraska? And are we concerned about that? And that question is fundamentally why we here at Nebraska Farm Bureau on a regular basis are working on those relationships around the world. There was another question talking about just Nebraska's trade trips that we do. And what we do, and the reason we do that, is to establish relationships with other entities and other businesses. It's not necessarily the country, but it's the business to business relationship that it takes to actually make a deal. And that's the other reason why we are so fired up about potentially getting E15 year round, working on sustainable aviation fuel. Because if we do those types of things and we can add value right here in Nebraska for the process, we will not have the need to have China as such a big player. And that really nullifies or takes out that big kind of entity that we feel like we have to trade with. And so I think that's the reason that we are so adamant. We appreciate Senator Fisher, Adrian Smith working on the year-round E15 because that really could be a game changer. And those are the type of things that we need to do to ensure that we have stability in the farm economy here in Nebraska. Well, I think that about wraps up our time together. I certainly appreciate everyone that jumped on this morning to talk about trade, talk about Nebraska economy, talk about the ag sector here in Nebraska. We just have a lot of great news outlets that cover the Nebraska economy well, and certainly the ag sector. We do appreciate that. Thank you for those of us that joined us on the panel. Thank you for your input. We appreciate that. And we hope that everyone has a good rest of their day today on May 1st.